What's going on, you guys? My name is Zach Hartley, and yesterday I posted in my Discord chat that I was buying Apple options, and so in this video I'm going to give you a full breakdown of that trade, what went through my mind, and how I decided what options I was going to buy. Here is everything you need to know. Let's go. Okay, so for full transparency, here's the post that I put in the Discord chat yesterday. I didn't give the strike price or anything because I don't want my Discord being used as a signal. It is not a signal service. It is a resource and a community, but I do share a lot of my trades in there. And so the Apple options that I bought were for an expiry of April 16th. Those $160 call options. And this is what the small account challenge portfolio looks like right now. Current value of the portfolio is $6,700. And on these options, just one day later, we're currently up 21.21%. And if you guys get any value from this level of transparency, please remember to click that like and subscribe button down below. This is full transparency for the small account challenge, so I hope you appreciate it. Now, when it comes to options, just as a little recap, options are the ability to buy a stock at a specific price on a specific day. There's a little bit of terminology that comes along with them as well. So the strike price is the specific price that you're allowed to buy them at a later date. So you're basically allowed to buy those shares at the strike price in the options contract. Now, a contract represents 100 shares. It's kind of like your eggs are sold in a dozen. Options are sold in a contract that represents 100 shares. The price you pay for that contract is on a per share basis, and that is referred to as your premium. That contract expires on the day that you can buy those shares. So if I buy a contract of Apple options that expire on April 16th, it means that on April 16th, I have the option to buy those shares. Otherwise, that contract expires and it's worth absolutely zero. Now, when you're buying the shares and you're hoping that the share price goes up, that is called a call option. That means that you're long on the stock and you want the stock to go up. The exact opposite would be referred to as a put option. It basically means you want the stock to go down and you'll make money when the stock goes down. It's basically the same idea as shorting, but for options. Now, I know that was a lot to take in, and there's a lot of definitions when it comes to options. So if you want to learn more, I do have a full options course. It is hosted on Skillshare, and you get a 2-week free trial when you use the link down below. It's a 2.5-hour long course, so if you can do the whole thing in one sitting, cancel your subscription, you get the entire thing for free. The link is down in the description. It's hosted on Skillshare. There's 15 reviews, and 255 students have already gone through the course. It's really, really good, and it'll give you the basic understanding that you need in order to get started. I highly recommend you start with a practice account though. Now, why options? Why do people use options, and why is this something that I use? Well, there's primarily two reasons that somebody will use options. Number one, to increase the risk or the return of an investment. So they're a lot more volatile. When the stock moves by 5%, the options usually move by a whole lot more than that. And so basically what it does is it amplifies your risk and return, almost like you were using leverage and borrowing from your broker, except you're just trading options instead of borrowing that money. The other reason that people use options is to hedge their risk. So for instance, if you're really, really short on Tesla right now, you might have all of your money going short against Tesla right now. You could buy options that are long on Tesla so that if you're wrong about your short position, you don't lose all of that money, because the risk return ratio on your long position for Tesla could make up that loss. And so sometimes options are used to hedge your bets or hedge your risk in your portfolio. I am personally using options in this trade to increase my exposure and my risk to reward ratio when trading Apple. The stock isn't going to move that much, but I do think it is going to move. So to increase that risk to return ratio, I am choosing to use options rather than to borrow through Questrade, use the leverage there and pay an interest rate on it. I'm going to use options instead. And I'm using these options to take advantage of a short-term price swing. That is the reason behind this. I am not buying and holding Apple long-term. This is a short-term small account challenge. I am swing trading here, and so I'm using options to increase my leverage for a short-term trade. Now, things you need to know about how I am trading options right now. Number one, this is all just my opinion. You need to do your own due diligence. This is just one strategy. I trade with multiple strategies. This is just one that I am using right now. I posted it in the Discord, so I want to share my analysis and my thoughts behind it. So things to know. Number one, I do not hold my options until expiry. So this Apple call option expires in April. I am planning to sell it probably before April even begins. So I am not going to be holding it till the end of expiry, and I can sell it at any point. So as long as the market is open and people are transacting Apple options, I will be able to sell it at any point leading up to expiration. And if the stock price goes up, the value of those options is probably going to go up. So I can sell it today, I could sell it tomorrow, I could sell it 3 days from now. It was up 21% today, so I could have basically just taken my 20% 100%, locked it in and exited the trade. I could have done that today. I'm gonna hold it and I'm gonna kind of see how it develops, and I'm gonna walk you through that in just a second. But that's something you need to know, is that options can be traded pretty much like stocks, except they do expire at a specific date, so you need to be well aware of that. Next thing is liquidity and spreads are important. I am trading the highest volume stock on the market. There are more shares traded of Apple than almost anything else, and so liquidity and spreads is not an issue for me because there's a lot of people trading the stock as well as the options. However, if you were trading a young little biotech company or a tiny little tech company or a cannabis company, those options do not have as much volume on them. Therefore, your spreads between your buy and your ask can be much larger, and it can be much harder to get in and out at the levels you want, and it can be a little bit riskier trading. And so liquidity and spreads are extremely important when you are trading options. Next thing is that this is all just my opinion and how I think about options. There's multiple different strategies here, and there's different ways to do it. Especially if you're a long-term investor, you could hold Apple all the way until expiry and then buy the shares, and now you've got shares at a great price. That's one strategy. That's not what I'm doing in this video, but it's definitely available. And lastly, I want to point out that all of my technical analysis is done on the stock chart. Options move based on the stock price. So when you see support and resistance in the options chart, it is not nearly as strong as if you saw support and resistance in the stock chart. So I personally perform all of my analysis on the stock chart because it is way more important, because the options trade based on the stock chart. Okay, so let's get into the trade. So this is the trade that I decided to go with. I decided on this trade after performing technical analysis on a variety of different stocks. I pointed it out in my weekly watch list earlier this week. I think I even shouted it out a couple weeks ago. Apple's been on my radar for a few weeks, and now I think there's finally an opportunity. Here are my assumptions. Number one, I think Apple will break the resistance in 1 to 2 weeks. Resistance is right here. So this 137 to 140 level, this is resistance. The reason it's resistance is because Apple was rejected at this level here in September. It was rejected again at the beginning or kind of end of December here. And now we are approaching this level once again. And if we get rejected, it's going to be clear resistance again, or we are going to break through this resistance today or on the next bounce off this trend line. So my hypothesis and my assumption is Apple stock breaks through that resistance in the next 1 to 2 weeks, whether it breaks through on this run right now or it hovers here around 130, 135 for another week and then breaks through after that. My assumption is it's going to break through 139, 140 level, and it's going to start running up after that. The next thing is Apple will not break the trend line. So for instance here, if Apple falls below this trend line by a decent margin, that will be breaking the trend line. That will be a break of support, a fall of support, and that means that we could be looking at a trend reversal, and I'll probably exit the trade at that point. Now, when we zoom in here, here is what I think is actually going to happen to the stock price. I think we're going to break through 140. We might move up to 145, 150. We're going to come back down. We might test it, and then from there, I think we're going to move higher. The goal of this options trade is to take advantage of this short-term movement and this short-term move higher. I am trying to take advantage of this 139 to 140 level, moving up to 145 to 150. That's the move that I am trying to take advantage here, and that is what I am trying to capitalize on with this options trade. Now, how do you choose an option, and why did I choose that specific option? Well, when it comes to choosing an option, you have 3 different variables you need to consider. So number 1 is the call or put. Are you short or long on this stock? Do you think it's going to go up or down? I think it's going to go up. I am long on the stock, and so I am buying call options. So that's number 1 out of the way, really easy. The next 2 ones are a little bit more complicated. For the sake of this video, we're only focusing on call options, but the next 2 factors here, let's dive into them. So number 1 is expiration. So expiration, this is what you need to ask yourself. How long is it going to take for this pattern to reach the levels that I am looking for? So those lines that I drew on that stock chart right here, how long is it going to take for this to happen? So I'm looking at this and I'm saying, okay, maybe February it retests in here, March it kind of breaks through, but by the time March starts, we should be ready to go. We should be somewhere where I'm ready to take profit. So when I look at the chart, I go, okay, I need up until March, and then what you need to ask yourself is, if it takes longer than expected, are you going to be okay? And so if it takes longer than March, am I going to be okay? So what I did was I added in a little bit extra room, and I decided April would be a good expiry. That way, if the pattern that I'm expecting and the price action that I'm expecting just takes longer than I was expecting, that's no problem. I can prepare to that to a certain margin, and that's what I'm going to do here by adding in a little bit extra time. So for me, I think it's going to take a month or 2 for my pattern to unfold, and then I'm going to add on an extra month there so that I have a little bit of a buffer time. And so for me, I decided decided that the expiration on the option that I wanted to buy was in April. And so that's how I thought about the expiration for Apple. I thought this pattern and my assumptions are going to take 1 to 2 months to play out. I need an extra month worth of time there, so let's go for 3 month timeline. That way middle of April is when my options expire, and I'm buying them pretty much middle of January, so I got about 3 months worth of time there. Now the next factor you need to consider is your strike price. Now once you've decided your expiration, you go through the list and you say, okay, here are the strike prices that I can choose. The number one factor and the main factor that makes up 80% of your decision should be your position size. How much can you actually afford to put into this stock? Some of these options get really expensive, especially if you're looking at Amazon or Shopify. These stocks that are in the $1,000 range, the options can only be sold in contracts, which means you have to multiply whatever price you see by 100 to buy that contract, which means it can sometimes be a very large initial entry or minimum entry to get some of these options. And so you need to, number one, think about position size. Whatever your strategy is for position sizing, if you say my max position size is 7% or 10%, you cannot go over that when it comes to buying your options. You need to follow your strategy. Now, once you've established what your position size is, for me it was between 5 and 7% of my portfolio. I said, okay, how many contracts can I buy for that at what price? Unfortunately, basically the only options I had were to buy one contract, and the only strike prices that fit within my position size that I was looking for were the 155 to 165 call options. And so I chose the middle option there. I went for a medium size position in my portfolio, and that is how I decided my strike price. It wasn't based on analyzing all of the different strike prices and seeing which one fit in. I have a small portfolio that I'm managing here. Position size is the number one thing that I need to think about, and so I basically chose what I could get into at the time. I placed a limit order on it. I got in right away. It was really easy to get in. It wasn't difficult, and I got in at a level that I was happy with, and now today we're up over 21%, which is absolutely amazing. So when it comes to your expiration, it really depends on how long it takes your strategy and your pattern to unfold. And when it comes to strike price, the number one thing is position size. And then if you have the option to buy more than one contract, that's when you start looking at the prices and saying, which one is going to give me the best deal? And if I can buy more than one contract, do I want to buy 2 contracts or 3 contracts so that I can size in or size out of this trade? Those are the other things that you want to consider. But the number one thing is position size, especially if you're trading the high ticket expensive stocks where just to buy one contract is going to cost you a couple $1,000s. That's where position sizing is super, super crucial. Now, when it comes to the results, it's only been one day, so I am jumping the gun here. This could totally change tomorrow. Relax here, but as of today, the stock went up 1.61% and the Apple options went up 19.4%. I'll throw up both of the screenshots right now. The date is January 22nd, 2021, but here you go. You can see how volatile the options are compared to the stock. This is why you need to get educated first. You need to stake some type of course or education system to understand options, and then you need to start with a practice account. I did 3 years of practice account trading in university, competing in competitions, trading options before I ever actually used my real money trading options. They're really, really complicated. You can really blow up your account fast, and so you need to be very, very careful. Position sizing and diversification is key. Now, risk management. Here is how I am planning to mitigate my risk on this trade. Number one, I am going to sell Apple if it falls through that support line. If it doesn't break through and it just falls through that support line, I'm out. I'm going to take my loss. I'm going to call it a day. This was a bad trade. That's it. Secondly, if Apple falls below 125, if Apple kind of hovers around and then stays there, I think it has some support at 126, 127. So if it falls to 125, I'm out again. Support has fallen. It's just a bad trade. Totally get out of it. Take my loss, take the small percent that I lose, and just call it a day. However, I'm also going to take my profit after the breakout and when the Apple stock falls by 5%. So the goal here is to get out at the very top. When Apple breaks out and it starts to move up, as soon as that stock price starts to curve or flatten out or start to tail off, that's when I'm going to sell my shares. That's when I'm going to get out. That's when I'm going to take my profit. That is my full plan for this trade. Now, if you guys are interested in learning more about my technical analysis and receiving my weekly watch list, then definitely consider signing up for my Discord chat. That is where I'm trying to build a community of traders that share their due diligence, share their research, share some of their trades, and share all of their analysis so that we can improve together and build a community of traders that get better and make more money. That is the end goal here. So if you're interested in joining, it is $5 per month, and it's basically a community where you don't have to sit at home alone. You can actually talk to other people that are going through the same thing you are, which is absolutely fantastic. fantastic. The link is down in the description below. Now, in summary, options are extremely volatile. The stock moved by 1.8% today and my options moved by like 20. You need to get educated. You need to understand what you're doing before you start trading options, and you need to start with a practice account. I did 3 years of practice account options trading before I ever actually used my own money. And the last thing is, I've seen several people buy options in small companies that have no volume and they can't get out of the trade at the level that they want, and the volume doesn't move and the price doesn't move, and it's just a nightmare. So if you're gonna trade options, make sure you trade a stock or a security that has lots of volume and really close spreads so that you know you can get in and out of it easily. You don't wanna get trapped. And if you got any value at all out of this video, please consider hitting that like and subscribe button. I sincerely appreciate it, and we'll see you in the weekly watch list video tomorrow